It's great to have so many of you joining here, both in person as virtually. I'm Nanne Tolsma, the head of client relations for Satelligence. And what we do at Satelligence, we provide satellite-based environmental risk and carbon performance solutions, both for forestry as for agriculture. As there was already a lot of focus on these new technologies yesterday, I thought it would be fun to focus specifically on biodiversity with my guest that I have over here, who is Anita McBain from Citi. She is the head of ESG research EMEA at Citi. In the past couple of months, Anita and I had some great conversations around some of the knowledge pieces that she has been working on, and we thought we would share some of these outcomes in this session today, specifically focusing on biodiversity. And if you're joining online, please do get a question in the first 20 minutes or so, because we just have 30 minutes, and I also want to pick them up at the end. So before we start, I would also like to give the opportunity to you, Anita, to give a short introduction.
Thanks, Nanne, and it's a pleasure to be here today. I've spent over a decade actually looking at issues around deforestation, biodiversity loss, climate change, and first met Satelligence, I think, over 6 years ago. I'm head of research at Citigroup. We write research on the key ESG topics. Without doubt, climate change is the most pressing issue, followed by energy transition, followed by biodiversity loss. We've published a huge amount in the public domain. So if you go to Citi GPS, you'll see some of our latest research. We've published a report on biodiversity. We've published a report on impact investing. And together with Nanne, we also published a report just last week on space technology. What's interesting about space technology is that it can actually be part of the solution, which is something investors are really keen to understand. So 31 out of 50 essential climate variables are monitored using Earth observation. So I worked very closely with Nanne. We're very keen to understand how can we bridge that data gap for investors. Investors are acutely aware that they now need to start tackling the issues around deforestation and illegal deforestation in their supply chains. So it's my pleasure to be here today, and I look forward to the engagement and the questions. Thanks, Nanne.
Yeah, thank you so much, Anita, for that. And of course, in your research, you come across a lot of the latest developments. What do you see with respect to biodiversity? What do you see as the main trends currently?
Yeah, thank you for the question. So actually, just a couple of months ago, we launched a dedicated investor sentiment survey on biodiversity. And we're certainly witnessing in real time an upskilling within the institutional investor base on how to integrate biodiversity into the investment process. It most certainly is climate first. We've been there now for about 5 years, trying to understand the data, integrate it into the portfolio analysis, and looking at portfolio alignment towards Paris. But certainly, every single conversation that we're having now with our investors, clients in Europe, we're getting questions around biodiversity. Some of our clients are upskilling in real time, and they actually have dedicated biodiversity analysts within their investment teams. I had one meeting recently where I had 17 questions on biodiversity. Others are earlier on in their journey. So the report that we published last year really is to address this question, why? Why should investors start thinking about biodiversity loss? We see it as being a twin crisis. There is no net zero without negative emissions, and negative emissions come from carbon sequestration and by keeping our forests standing, and one of my colleagues describes this as ancient technology. So the investor community is really looking to try and understand where it can be impactful. How does it bring it into its portfolio construction, and how does it engage with its investee company on these issues? So a lot of interesting touch points for us with investors.
Yeah, and I think I recognize that also when I talk to a lot of asset managers and other financial institutions here, it seems that almost everyone at least has biodiversity as a main investment theme. But at the same time, I also think it's, or that's what I hear, it's very challenging to actually know how do we measure it, or how can we really create impact within this specific theme. What do you still see as some of these main challenges?
I don't think it's a surprise that data is the biggest challenge. Yet we hosted a couple of expert events last year with professors of biology from Oxford University, and Professor Godfrey, Charles Godfrey, he's a population biologist, he talks about data is no longer an impediment to progress, especially when it comes to deforestation. We've got more than enough data to get started. We can look at CDP forest data, for example. I think it's about 500 companies approximately that disclose into CDP forest. Already we're starting to see companies start to disclose across their commodities. Not all of them are fully mapped, but certainly some of their key commodities like palm oil and soy, they're trying to map in their supply chain, trying to understand where the hotspots are, to demonstrate that transparency and traceability. And that's a really important point for investors. Investors want to know how transparent and how traceable are the supply chains. And if there are areas, where are the hotspots and how are the companies dealing with those hotspots? We recognize that these key commodities, palm, beef, soy, timber, cocoa, coffee, rubber, they're very complex commodities, and the supply chains, you can suddenly reach, second or third tier and you lose that transparency. But we're also seeing draft EU regulation coming in. Regulation is a key driver for our investor community. It's been catalytic in how they're starting to think about, yes, climate, but certainly about deforestation and now biodiversity. And if we do see this draft EU regulation coming into effect that looks to penalise companies that can be traced to sourcing commodities from illegal deforestation, that is financially material. So for a lot of investors, it's trying to understand what's the financial material risk here, what's the transition risk, what's the reputational risk, the litigation risk. Because for investors, these types of risks are sticky. They can suddenly have a breach in the supply chain, a company can be found for egregious incidences in its supply chain, whether it's modern slavery, whether it's damaging the environment, and those can become problematic for investors. So we're certainly seeing a willingness to unpick the data, to understand how it can be used to drive engagement. Engagement being the key word here. We've gone from divestment into much more of an engagement type of strategy.
Yeah, that's great. And I think also one of the things when you talk about it, what you mentioned is there is already a lot of data out there. What's of course not out there, especially when we talk about some of these complex supply chains, is that we have the end-to-end traceability, but we also should not wait for the perfect data to be available. There is already a lot to work with, and companies that do that. I also want to touch on a point, and maybe it's already mentioned in the session before on biodiversity, but I was not in the room at that time. But I think in some of the sessions yesterday, it was also highlighted by speakers that a lot of focus is actually on carbon. It's also the most discussed topic on this conference, but maybe there's too much focus on it, actually. There's also other important themes. Well, we talk about biodiversity now, but for instance, water, which is very important, has been completely neglected. What's your opinion on this? Do you see it as a risk or is it an opportunity?
By building resilience into our ecosystems, they can be part of the solution to tackling climate change, tackling biodiversity loss. We're certainly seeing the investor community. Yes, of course, there are certainly investors that are on day one of their journey, but those that are pushing through the data challenge, shall we say, are starting to look at this. What do the solutions look like? And how is this part of that solution to tackling food insecurity, water scarcity, adaptation, mitigation? We think about the EU taxonomy a lot. So you've got adaptation, mitigation, pollution, water scarcity, circularity, biodiversity. So it's really starting to enter the narrative for investors. Yes, we can see that there's an impact from these particular sectors on biodiversity, but then how do we also identify those companies that are part of the solution? So they're building resilience into their ecosystems, building resilience into the food system, because ultimately we have to feed 2 billion people by 2050. How do we do that? We can't continue to deplete the Earth's resources and cut down all of our tropical forests. So there's a lot of focus now on the solutions, on the opportunities, and what do they look like, whether it's precision agriculture, smart agriculture, regenerative agriculture, sustainable intensification, there's a whole range, vertical farming, etc. So we're certainly seeing investors keen to understand now which companies are demonstrating the awareness of their impact and then reducing that impact. And what does this new technology look like? And I think the difference between, I've spent my entire past decade plus looking at carbon, is, you look out the window, you can't necessarily say, because 215 today, 212 parts per million. But with biodiversity, with the monitoring that we're now starting to see, the satellite monitoring, actually it's a bit more tangible. And investors looking to demonstrate that impact that their portfolio is having is actually bringing them on board, because they're like, right, we can actually see the impact that's happening. Nature does bounce back. That's been proven. And with these efforts, together with the public, private sector financing, conservation, the science, we're starting to see much more interest now in being part of that and having that tangible outcome from these efforts, these investor efforts.
Yeah, that's great. And I think it's also part of the reason that at the recent COP there was so much focus on deforestation, because in the end it's quite visible, and we have all the tools to measure it and make it visible. I also want to take a step back, and that's to some of the alternative data that we already discussed. What specific type of data are investors actually looking for at the moment in the biodiversity space, and what's maybe still lacking? Yeah,
I think what's been really interesting is when I was at the Glasgow climate talks, so 2021, COP26 Glasgow versus Paris Agreement 2015. In 2015, we just didn't have the data stack that we have now. The CFA talks about this era of data superabundance. And this era of data superabundance is coming from this geospatial data technology now. So we've got this geospatial data coming online through the European Space Agency, the North American Space Agency. We've got unmanned aerial drones. And we've also got eDNA, which is actually where they're taking the samples from the soil, from water, from the air. And they're doing this triangulation. And what that is allowing is to actually assess the integrity of the ecosystem, so the biodiversity intactness. So that's new. That's where we are here in 2022. We're here now with an emerging data stack with companies like Untitled that can take this data and look at it at the longitudinal and latitudinal level and give that data to companies to allow them to communicate to their investor base how transparent, how traceable their supply chain is, and especially if there's a hotspot in that supply chain. One of the issues that we had in 2015, just after the Paris Agreement, was yes, a lot of companies were trying to demonstrate that they were mapping their supply chains. It was mostly emissions, scopes 1, 2, and then some of the scope 3 into their supply chains. But they just didn't have the data, and they would hide behind that. Oh, we just don't have the data. It doesn't have the data. I think that shrugging of the shoulders is now past. I think we're now at a stage where the data is coming online, and that data is coming down to a level of granularity. And the issue now is that up to what point does the investor go, and what point does the company go? And we're certainly seeing a lot more companies disclose into the public domain the longitudinal and latitudinal coordinates of their palm oil companies. I've sat there on desk and looked at 400 coordinates, plugged them into Google Earth, and actually gone down to the location. So we know that companies have this data, and we know it's incumbent on them now to use this technology to communicate to their investor base how they're mapping their supply chain. If they found a hotspot in their supply chain, what they're doing about that. If they found a breach, how are they dealing with that? And that's the era that we're in now. So the investor community that we speak to are having these conversations. They're putting these questions to their portfolio companies.
Yeah, thanks. I think, and sorry for that I slightly have to disagree with one of the things that you said, and it was around the fact when you talked about scope 1, 2, and 3 emissions that companies hide behind the data. I think some of them definitely do, but it's also, I think there is also a lot of companies that are out here and that we work with that actually already work with this data and try to improve their supply chain. But it's, of course, it's a super complex problem. You also have to take into account governance policies and these type of things. So yes, there are companies that try to hide behind it, but also definitely ones that are doing a good job. And this also ties into the work that we currently do with some of the financial institutions that we work with, Robeco, Actiam, and other asset managers, where we really try to help them in that active ownership part and that engagement that we touched upon earlier. So it's really not anymore about divesting, but providing them with the tools to have a good conversation with these companies and also help them along. And I think this is a great progress, because in the end, when you make a decision to invest in a company or not, you need to understand the challenges of these companies and have a conversation with them, not just look at how is their financial sheet or whatever else is important in that space. And also the next step tied into that is then also supporting these companies on their sustainability journey. So when, let's say, you talk to an organization on a yearly basis and they're having a down year from a sustainability perspective, whether that's on the biodiversity or any other potential environmental risk, have a conversation with them, look at how to improve it rather than just divest straight away. Looking at the time, I also want to move to some questions that anyone may have on the floor. So please raise your hand if you do. Gentleman over there.
Thanks very much for that. Andy Bennett from Innovate UK KTN. So you talked about some of the satellite data you're using. Can you go into a bit more detail about what are you using and what are you measuring from that?
Yeah, sure. So we specifically look at environmental risk and carbon performance in agricultural commodity supply chains or investment areas. So we have a global scope, and what we mainly work on is connecting the satellite data, usually publicly available satellite data, to ownership information. So who owns a piece of land, and that we tie together to give advice to companies. And we usually operate in global supply chains. So when we work with consumer good brands like Unilever, Mondelez, these type of organizations, we advise them where is the deforestation risk, land use change risk in your supply chain, and also who is responsible for it. So which supplier should you talk to reconsider, for instance, sourcing.
Hi, Lucy Carmody from Climate Impact Partners. Just interested to hear what Anita thinks about biodiversity credit issuance and whether, so if you set baseline in a project and you can create a biodiversity credit for it, are you assuming that the companies will have a target for biodiversity positive and therefore, which will be sort of similar to SBTI aligned carbon net zero, and then they'll have to buy the credits to help them achieve that trajectory?
I'm not sure I've fully got the question, but the role of offsetting and demonstrating a net positive strategy, I mean a net positive biodiversity strategy. I think it's still too nascent for me to comment on that. We were certainly hoping at the COP last year that we were going to have greater clarity on the role of credits, generally speaking, as part of a net zero strategy. I'm afraid I'm not as qualified to answer on the role of biodiversity credits as corporates, but I don't know if none of you've got a view there.
No, also nothing to add to that. Yeah. Yeah, please.
What is there an obligation?
Yeah. So maybe I'll take this first, and then you can tie into it if you have anything to add. So I think what you see that we are now in this space for 6-7 years now. And when we started out 6 years ago, a lot of the work was really with the upstream companies, so the large growers, producers that have a very big supply chain already. And this has moved really rapidly downstream in the supply chain, so involving consumer good brands, also retail now more and more. It's at this stage, it's still very much what we call like the early adopters. So let's say 5% of the market that really takes this seriously and acts upon it and really incorporates the sustainability data into their procurement department, into their decision making. But what we see now also with the upcoming regulation that Anita also touched upon, like the EU regulation around deforestation, we now see that a lot more companies are starting to look at, okay, how do we solve this transparency and traceability issue in our supply chain?
And all I'd add to that is, regulation has been a key driver, or it's been catalytic here in Europe. If we just look at Scope 3 emissions, and we look at what's come out recently from the SEC, we look at and I was in some of the sessions earlier, we've got TCFD, there's a potential TNFD on the horizon. So we know that companies that are in front of the regs, they know that there's going to be this expectation on them to, for example, disclose on their Scope 3. So we are certainly seeing companies demonstrating that disclosure. I mean, I've looked at this myself and looked at all this, which of the 15 Scope 3s they've disclosed on. So it's all part of the same effort here towards greater transparency. And that's the whole point of the SFDR, is to have companies reporting. We've got the Corporate Sustainability Reporting Directive coming into effect. So it all ties into that, because deforestation is part of those SFDR as well. So companies know that these questions are coming. So for those companies, the big public listed companies that are having to demonstrate this awareness to their investors are definitely trying to get in front of it. We'll certainly see that.
Sure. Yeah, thanks. I think we can take 1 or 2 more questions. Let's see. I think the gentleman there had a question.
One on the screen from online as
well. Hi, thanks for the interesting conversation. Just, in terms of the topics we're talking about, it seems to be, we're using deforestation and biodiversity a bit interchangeably. Specifically when it comes to biodiversity, I'm just wondering what exactly is the investor interest specifically on that topic. I used to trade agriculture at Citi 6 years ago, and even back then, the Unilevers, Cargills of this world were very interested in traceability when it comes to deforestation. But when it comes to biodiversity specifically, why are these investors so interested in this area?
I can have a first stab at that. It's we just have to look at what came out of the Dasgupta review last year. We've got the Banque de France that came out with the Silent Spring that talked about the financial materiality of biodiversity loss. We've got the Dutch Central Bank indebted to nature. They talked about the financial risk, and Dasgupta talked about this potential, it's almost like the tragedy on the horizon. It's not dissimilar to what we saw with Nick Stern in 2006 when he published his report, and the economics of biodiversity that came out of Dasgupta from Her Majesty's Treasury. The clue's in the name, it's in the economics. So we're starting to see this greater awareness now that the entire economy rests on these sectors, and these sectors are dependent on biodiversity. If we lose those ecosystem services, pollination, clean air, clean water, carbon sequestration, that is financially material. Apparently 1 in every 3 bites of food is linked to pollination. If our colonies collapse, we knock out pollination, what does that mean to food supply? So there's this awareness now of the financial materiality of biodiversity loss. If we lose those ecosystem services, that's the interest now of the investor community. And how do you actually start to place a value on that? How do you look at the companies that are driving that? And then could there be a future risk to those companies if they're found to be responsible for being drivers of ecological loss? And just to unpick that a little bit more, deforestation is the biggest driver of biodiversity loss. But in the decade ahead, climate change will be one of the biggest drivers. So habitat loss, encroachment, fragmentation, these destroy those habitats. These are critical biomes, and that's where they harbour most of our terrestrial biodiversity. But that's also not to ignore the fact that We've got marine pollution, ocean plastic pollution, microplastic pollution that's also damaging our aquatic ecosystems. So it's this awareness now that the global economies, that WEF report that sits on these sectors, and these sectors are reliant on ecosystem services. That's what's happening now. That's the awareness that's come today. But Nana, you might wish to add something to that.
Yeah, and I think I agree with what you say, right? And it's indeed why also the interest maybe moves more from an investor perspective is that, there is a limit to deforestation, and biodiversity is more encompassing that. I'm also ready for lunch. I don't know about you. So I want to finish off maybe with a take to lunch message, Anita, provided by you. We discussed some of the main trends already, but going forward, what do you see as big topics in the coming years?
Well, climate change and biodiversity loss are inextricably linked. Human health, habitat, ecosystem health. It's an inextricable link there between the two. It's a twin crisis. There's two sides of the same coin. There is no net zero without negative emissions. Negative emissions come from carbon sequestration. They come from keeping our forests standing. Deforestation is a great place to start. That's what I say. Thank you very much for your attention today.
Great. Thanks a lot, everyone.
Thank you, Nani.